Welcome traders. In this video, we're going to do a review of Friday's price action. The chart we are looking at is ES and the time frame we are using is the 2000 tick chart. Now, the only other supportive indicator I use is the 21 EMA, which is this purple line, which is oscillating up and down. And other than that, I look purely at price action and trend lines to look for high probability setups. Now, the first thing I like to do in the pre-market session is to look for the pre-market highs and low and label them, which are these purple lines. And they play a huge factor during the market because once price starts moving, we wait to see the initial reaction we have at them. They can also let me know if we are going to stay in a range like we did here during the pre-market session. And it can also let me know if price is going to break out of it and have a continuation, or price can fail the breakout and reverse back down. So I like to label them and I like to use them when looking for entries, as well as it helps me understand the language of the market. Now, in the pre-market session, you can see we have a very steep leg down. This is a very strong leg. It is about 100 points and it is unbroken. As you can see, it aligns with the EMA to the T. Now, this trend line is unbroken and we're expecting for price to test the new low. Now, we did have some small corrections that were going on before the open, and we did have a pullback, but it didn't retrace even close to the 60%. We got a bit close to it, but this downtrend was so strong, we literally came right near the 50% and we pushed back down. Now, this is an indicator that the market wants to test this new low. Now, initially, I was just treating and drawing each shortened downtrend, but once I saw a consistency of lower lows and higher lows, this gave me the confidence to draw a wider downtrend, because at first I had it drawn like this, but we kept going lower and lower, and this gave me the confidence to draw a wider downtrend like I did here. Now, this was right about or right around the market open, and usually around this time you might have some spike in volatility, so it's good to wait a couple minutes after the market open. But as you can see, as soon as the market opened, and let me just hide these lines actually so it doesn't distract us, and you can see at the market open, although we had a small spike in volatility, price was still respecting this trend line and we pushed back below EMA. Now, counting from this recent low we have here, right? We have a new low, first entry short, pullback, second entry short, and this right here is a lower high confirmation. Now, it didn't form below the EMA, but it did get a confirmation touch at the trend line. Usually, I like to take that. We don't always have to push below EMA, especially when we have such a strong downtrend. We have a secondary channel. This gives us, a double confirmation that market wants to test the new low. So this would have been a great setup. The only thing that threw me off a bit is it was right after the open, a few minutes, and usually price can pull back and have some volatility, so I ended up skipping. I was waiting for a double confirmation below EMA, and we had this failed second entry long, right? Counting from this recent high pivot, we have a new high. First entry long that failed, pullback, second entry long that failed, but it ended up closing as a strong bodied green candle towards the end, so I ended up skipping. And then as you can see, right, price started going in the middle of EMA, and we'll draw like a small little range. And once I saw that, I really didn't like it. It didn't really give me the confidence to take it. Price started going sideways, so I ended up waiting and I skipped until I saw more information. And slowly but surely, we started working higher, right? And guys, mind you, we don't always need to test the new low exactly, but as you can see over here, this was enough for the market to count it as a new low. It didn't make an exact new low, but it got close. It also bounced off of this key level support that I drew in the pre-market session. So this alone, you know, the market counted it as a new low, and as you can see, we strongly reversed. So once I saw that, we're going to count this as the new low, and now we are going to wait for the next market cycle. Now, and let me put back this trend line. Perfect. So we had a very strong spike in an uptrend, we also broke this resistance, and instead of it failing and pushing back down, it ended up slicing through it, and we had a series of higher highs and higher lows. And this alone just gave us the confidence to draw a wider uptrend. And now we're anticipating the market to have a continuation of it, right? Because this uptrend still hasn't broken. Now, the only thing that I see here is overshoot, right? And overshoot is similar to having an RSI indicator and when something is being overbought, but we can use it just by using trend lines, and the trend lines tell us that this is being overshot, right? Because once you draw it and you draw the top portion of the trend line and it breaks above it, right? This is an indicator that it's being overbought. And when this happens, we can expect a stronger correction or reversal. Now, you could have drawn this many ways. At first, I drew it a little bit tighter, like this, and I was looking for a higher low confirmation. So a higher low isn't enough when we have overshoot. It's best to wait for the shortened correction to play out, and I wait for a higher low confirmation of it. Now, counting from this new high, we have a new high, we have a first entry long, pullback, second entry long. This was actually a higher low, even though it was a red candle. Then we pulled back, and this could have been a double trap. The only issue is we didn't trigger lower than the previous candle, but so I ended up skipping. If it did, I probably would have skipped as well, just because we are below EMA, and the overshoot is the only thing that makes me a little weary of taking it. If we didn't have the overshoot, I definitely would consider. But as you can see, because of the overshoot, we also had a stronger leg down. Now, once I saw this, I adapted and I drew a brand new downtrend. We're going to draw the shortened correction. And as you can see, price strongly pushed up, came back down, and pushed up again, right? Now, the only issue we have with this is we're forgetting about the downtrend now, right? Especially that we retraced the 60% of it. So we're going to, invalidate it. And always the bigger trend has more precedence. And as you can see, we had a huge uptrend. We had about 80 points. So we're only focusing on the uptrend, especially after a strong retracement. Now we have a failed second entry short. Counting from this new low, we have a new low, first entry short, right? This is the first attempt for the bears to short that failed, pushed up above EMA, and this is the second attempt for bears to short, which failed. Triggered lower than the previous candle, strong bullish close above. Now, this looks good, but the only issue we have with it is this small uptrend played out, right? Yes, we're waiting for the bigger channel to get a new high, but you also have to respect the shortened trends. So this also, it looks like a two-leg pullback up, right? We have one leg, pullback, second leg. So getting in after a two-leg correction, it can be risky because we can get a stronger correction down, right? The bears can have more attempts, or we can have a short bearish correction. And also this reversal pattern formed all the way at the top of the move. So we can definitely anticipate a stronger pullback. So if you took it, I see why. I'm labeling it yellow because you have to be a little cautious with these setups. And if you did take it, you did end up losing on it. It pulled back and we came back down to this key level, right? So now we have a support that's being established, right? And it's very important to draw these levels out because it will let you know if the bulls are buying the pullbacks and if they're buying the bottom of this range at this support, and it gives you more confidence to take a long setup. Now, after we touch the support, we're going to draw the shortened corrections, right? Like this, we're going to draw them. And we're going to play a small range rules just because we are in a range right now, right? It's not a big range, but it is a range. Price is in the middle of EMA, and we are holding and we're playing both sides. We're touching the support, bouncing to the resistance, like a ping pong game, right? So we are looking to take longs, right? But we want to make sure when we take a long entry, it's not near this resistance, right? Especially when the shortened channels like this one, we have a shortened channel, we have a break of it and a new high. You have to respect the shortened channels. Let's say it was one strong leg up, we can consider going high. Taking a position at the high or at the highest pivot. but we have to respect the shortened channels as well. This shortened channel had a break and a new high. We had a higher low here, but it formed below EMA. If it formed above and we had a strong, nice bull bar, I would have considered. And then we ended up going sideways a bit and pushing back down to the support. Now, what do you guys see here, right? We see a triple test. We tested the support 3 times, and the bulls are buying it every single time. Now, if you want to, and if you're more of an experienced trader, you can take, and let me just draw the short and correction. Ugh, why is it not copying? There we go. You can take this second entry long, and let me tell you guys why. Well, we have multiple confirmations. Well, number one, we have a support that's a third bounce. It's a triple bounce, triple test, right? This small correction has a break and a new low, so we don't have to worry about any additional bearish correction. One leg, and let's make it yellow or green. One leg, second leg down, triple bounce, triple test, and we have a nice second entry short, right? Counting from this recent high, we have a new high, first entry long, pullback, second entry long, right? So we have a second entry long here, and this is a good setup to consider. I personally didn't take it just because price was bouncing and going sideways for a bit. Should I have taken it? Yes, but I was just waiting for more confirmation, especially with a bit of volatility that we have. So I was waiting for more of an additional confirmation, like a push above the EMA and a higher low, which we got here. So if you miss this, right, and you want more confirmation, you can wait for an additional push above EMA, and we have a higher low here. Now, a lot of you guys might be thinking, well, you said we can't go high, or we can't take a position at the high of the move, right? At the top of the move, at the resistance. But the only difference here is this leg is still one leg. Here, we had one leg break new high, but this short and uptrend is still in play, right? Let's say it was a little bit more tighter and we had a break in a new high. Sure, I'll skip. But this is a fresh new leg. We just did a triple test at the bottom of the support, and now we're anticipating price to reach the top of the move, right? To complete this big uptrend and to make a new high for it. So this is the first setup that I took for the day. We ended up pushing higher and we made a new high. Let's label it. So now what are we doing? Well, it's too early to go short, especially after a huge uptrend. What we're doing now is we're going to see if price is either going to turn into a range, right? Or if it's going to have a strong reversal or potential continuation. So for now, I'm just looking at price action. I want to see how it reacts, and we want to wait for the next market cycle. So I'm just going to respect the short and downtrends. We had a break, new low here. Like I said, it's too early to short. What you want to see at least is a break out of this support. Maybe this support turns into a resistance, and then we can look to short. But trading up here is a little too risky unless we have a very strong proven downtrend. So we had a break, new low here. Now we had an additional push up, right? Now you can, since we traded up in here, after the bearish corrections, you can start looking for bullish opportunities, right? What I usually like to look for is either a reversal pattern or a second entry long. So there was no reversal pattern here. This formed a little too late, right? So if you want to, you can consider taking it. This is a failed second entry short, right? But it did form a little too late, and I always emphasize on entering right after the push above EMA, the reclaim. So let's say it formed here, I would be more prone to take it, but because it happened after a push up, some sideways price action, I'm less likely to take a trade like that. And what I like to do is I'll count for a second entry long. So instead of counting for a reversal pattern after, a broad move, I would wait and reset count from the new high, and I would go new high, first entry long, second entry long. Now we didn't even get a first entry long, right? We haven't got a trigger higher than the previous candle. So this actually here would be the first entry long. So it's not enough, right? We need a second entry long. So this right here, I'm not even going to mark it. Let's get rid of it. So then we ended up breaking. This counts as a break, and we had a new high. So now we're pausing to go long. And then as you can see, we finally started reversing, right? We have a series of lower lows and lower highs. It fits good. I found this nice channel that I drew, and we had a bit of overshoot, which is some overselling. So when this happens, we just have to respect the correction because the correction can be longer, right? So at first, I always draw them a little tighter, but once I saw this bigger leg, I adjusted to the bigger channel. And a good way to measure it is when you have this leg, for instance, drawn, you can copy it and see, is this leg, right, smaller than this one, or is this leg bigger than this one? This one's a lot bigger, and bigger patterns take precedence. So we're gonna adjust and we're gonna wait for this uptrend to play out to look for a short position, right? So counting from this new high, we have a new high, first entry long failure, pullback. We don't have a failed second entry long yet. We don't, because this candle here, even if we were going to take a double bar entry, didn't even close lower than this one. So what we're waiting for is potentially another reversal pattern, but we don't have it. None of the a reversal pattern did not form here whatsoever. So we ended up going back down and pushing back up. Now, once I saw this stronger push up, I said forget about it. And the Fibonacci is a great tool. Once you see a 60 retracement or a 60-point retracement above, right, you want to skip looking to go short. And as you can see, we got very close to the 60% retracement, well, close to the 50. And price started going a bit sideways. We didn't have any additional pushes lower. And this is also because now we're getting close to the market close. Usually 30 minutes before the close, I don't like to trade unless it's a super high probability setup. But I think this definitely has to do with price action kind of going sideways, some indecision before the weekend. So that was it. And then market closed. So that was the trades we had today. Some decent setups. In the beginning was a little confusing. We expected price to test and make a new low. We ended up reversing. This attempt was enough for the bears to count as a new low. Strong push, strong uptrend working higher, right? Now we're waiting for the uptrend to get complete, and because of the overshoot, we expected a stronger correction. First high probability setup. This is also a good high probability setup, but the reason why I skipped it is I just wanted a little bit more of some confirmations. If you took it, it makes sense, especially if you took it and you held it, you had a very strong runner. We finally broke, made a new high, respected the shortened corrections. We're waiting for an for the uptrend to get completed here, looking for a long entry, nothing set up. And then we had a nice downtrend working lower, and market closed, or we were close to market close, and there was, regardless, no setups or any pushes lower at the EMA. So that was it for today. Usually we have a little bit more price action on Fridays, but you know, one or two trades is more than enough, as I always say. Quality over quantity. And I'll see you guys in the next video. Take care.